What stood out for you in the 2025 Wellness Real Estate Report in terms of the key performance indicators and trends?
I mean, I think the most surprising data point for me, which comes pretty early on in the report, so I would encourage everybody to take a look, is just the fact that you see such strong total revenue per available room and per occupied room for major wellness assets in just the upscale category, which historically we might have thought about providing more limited service. And when you compare that to luxury, upper or upscale is even outperforming the luxury assets in that category. And to me, that's just a complete paradigm shift versus what we would have thought of historically. So that's very interesting. And obviously, it could signal a shift in where people are going to allocate capital and how they're going to reposition their amenities, what services are adding value, what amenities add value, how you want to construct your new development.
You mentioned earlier, the fact that you've got these upscale category with standout revenues in the major wellness category. You use the word democratization of this particular field. Can you tell me a little bit more about that? What is your interpretation of that?
I mean, it says to me, and maybe this makes complete sense, maybe I'm stating the obvious, right? In the upscale category, you have the largest total addressable market of potential guests. So, they're fishing in a bigger pond just to start with. But what it says to me is there's very strong appeal for these leisure type assets like tennis, like paddle, like pickleball, like golf, that are really approachable for everyone. And if they are going after the broadest consumer segment in that upscale price category, we're having a democratization of the leisure assets. They're also on theme with other things that we're seeing in the industry, which are multi-generational travel, right? Families traveling together. A shift to people looking for new experiences or events. And that can be anything like a rock concert or a pickleball tournament. And then you're also seeing things where people want to do things in groups. And I don't just mean family groups, but for example, group travel with remote and hybrid work, with the advent of, or the ease with which we now use telecommunications, bringing people together to have an event, an experience together is a lot more fun than just sitting in a boardroom. And so I think being in that upscale segment where you see this really strong total revenue per occupied and per available room suggests that those assets are hitting the right mix of price point for the customer or the corporate that's sponsoring the event and the amenities that people are looking for.
Looking at bottom line performance, we still continue to see that minor wellness is arguably the most attractive proposition. It's much more agile, much more economical category. Do you think that this is a pattern that we will continue to see?
I think it depends on location. I think well branded, well located, well positioned hotels with very few amenities have always done well in terms of profit margin and profit conversion, but they do rely on there being other demand generators in close proximity, or at least within proximity of a train or an Uber ride. If you can't put a select service asset in a more remote location where you cannot access food and beverage, events, you need a demand driver. So either the hotel or the resort needs to create it itself, or it needs to be in close proximity. But I don't think that it's new that a more select service asset, again, the right one with good CapEx, good branding, good asset management, is the most profitable. Not the highest dollar profit, but the highest margin and the highest conversion. That's not surprising. So there is definitely a balance between how many dollars do you want to bring in and how much margin do you want to bring in? Because unfortunately, we don't take just margin to the bank.
It's interesting you was talking about depends on the region. And I think we saw that when we looked at comparing 2024 to 2023. I think America showed limited growth and particularly across the categories. But opportunity was definitely there in Africa, which was showing double-digit growth in GoPar. So I think investors and developers can look at opportunities around the globe, with a perspective of where growth is being driven, particularly at that bottom line. Do you think in America right now, do you think that as we look forward to the rest of 2025, that we're going to see similar results in 2025 compared to 2024?
Our outlook for 2025 is that we're going to have very muted top line growth. Now, that's not specific to any one asset. As we all know, hotels are location, location, location. So they're location and price point specific, but in general, we expect very muted top line growth, and we expect expense growth to outpace the top line. Now, given what's happening in the geopolitical environment, we could also see a situation where, although fewer international travelers come to the US, the weak dollar may suggest that more Americans will stay home. And so we could see a shift in the pattern of where people are traveling over the busy summer travel season. And we could see stronger results at what we might call the regional or drive-to resort destinations, because things with the weak dollar are just really expensive for Americans to go overseas. Last year, I think Americans into Europe, they hit a high of like 125% of 2019, and it was an all-time record. So I guess I would put the question back to you, which is, if Americans go to Europe in lower numbers, what would that mean for those markets? If we did choose to stay home, I don't think America will be unique in feeling the slowdown. I think that, global travel patterns, on the positive, they're global. We can source our guests from anywhere, but they also have implications for everyone as well.
General questions right now, which is, what could investors and developers and operators gain from reading the Wellness Real Estate Report?
I think you really want to understand why you're building an amenity. What return is there for you? Not just, is the asset going to look nice in a picture? I mean, I understand that Instagram is important. I know I'm not a social media whiz, but in the end, developers want to make a return, and certainly owners do as well. And so I think we're in a situation where assets and the amenities within each asset need to earn their right to exist. We're seeing cost increases along the lines of construction, labor that goes into construction. Now we're talking about tariffs. You want to build things that move the needle, not just for the guest experience, but for your bottom line. And so I think taking a look at the wellness report and understanding which regions are doing well, and really how much bump you can expect in revenues and in profits from these different lifts and amenities is an important criteria. Otherwise, you run the risk of building something because you think it's nice, but then possibly not making the return that you had hoped for.
Yeah, that's what I enjoy looking at the report for, is looking at that disparity between top line and bottom line. And that really influences then the profile and type of leisure, sport, wellness that would need to be developed and add value to that particular property profile. Because I think, we're no longer just building a hotel with a spa.
Yeah, and I would also say, just going back to what we talked about earlier, the size of the total addressable market, right? It's a cost to build, it's the revenue that you're going to get from it. We happen to still be in a cyclical upturn, but are you building the amenities that appeal to the widest potential audience, not just the ones that pay the most? There are certain spa services, I'm sure, that are extremely expensive, but if they're fairly niche and we have a downturn of any sort, you'd be better served to backfill with groups looking to play pickleball and have them eating in your restaurant and using your other services than, a one-off niche spa treatment. You might get the same revenue out of the spa versus the pickleball, but you won't get the same revenue out of one guest as you would out of 20 or 30 or 50. So I think we need to think about the value that it creates over the entire life cycle, right? Hotels are cyclical, not just where they are sort of at the high point right now.
On that point, not just looking at the trends of today, because I think what we have seen is that the new wellness is longevity. And so
Yeah.
every developer is now looking at this space as from the perspective of it becoming a longevity offering. And in many cases, the profile of the asset doesn't, warrant there to be a longevity offering, particularly
Yeah.
from a medical perspective as well. So, I think we've gone through this evolution of beauty to spa, spa to wellness, and now longevity is the new thing. And as you quite rightly say, you've got to look at that space and look at those components with a view to it being sustainable economically, that is, for the
Yes.
long term.
Yeah, I think one, and I don't know too much about longevity science, so let's take this with a grain of salt. But one trend that I do see, and probably because I'm a data nerd, is that we all metricize everything now, or many of us do, right? Like I've got a Coros watch, other people have a Apple Watch. We're tracking our steps, we're tracking our blood sugar, we're tracking how well we sleep, etc. And so I'm not sure, you might longevity science retreats, that could be a little bit niche, but there could be things that could be upsold sort of more mass market, which would be, whatever you want to call them, cooling beds or rooms that encourage better sleep. I think people would be disappointed if they went to, particularly in the luxury space, to a property and saw that their deep sleep went down and their REM sleep went down, and right. So I think the metricizing everything has sort of, the gamification of health is a trend that seems to be continuing. And I wouldn't be surprised to see people trying to upsell suites that offer a boost in, or a planned boost in, what people think are their metrics. Sound machines, essential oils, cooling beds, all the things that people now have in their homes. If your luxury resort does not have those things, it's going to be difficult to really attract that type of athlete guest.
Which, interestingly, Wellness Real Estate Report this year does have a sponsoring partner,
Oh,
and that
wow.
sponsoring partner is Freshbed, who are all about providing a bed that aids sleep, and
Right.
specifically talking to what you're referring to there, which is controlling temperature, air circulation, all of those things that aid getting the best night's sleep. And in a strange sort of way, if we think about the essence of a hotel, at its bare minimum, it should be to provide a perfect night's sleep.
Relax and recharge. And I think, it used to be that you could go away and come back and be like, that was a lot of fun, but now your watch is going to tell you whether or not you really did recharge. And so
Exactly.
I think you're talking about, where science meets the guest. And I mean, I know when I travel, my sleep metrics go to hell in a handbasket. So I think it's great if you could offer somebody those same amenities. People will pay more for that.